Hey everybody, happy Friday. Welcome back to Swan Signal Live. Got a couple of special guests with us today. Of course, John Haar is with me as usual. How's it going, John? We've got Ben Workman, who is our CIO now at Swan, Chief Investment Officer, and it's been a lot of fun to get to know him, and he's been absolutely crushing it. And I think we've been keeping you a little busy, Ben.
Very busy. Very busy.
Very busy.
All good stuff. We're having a good time.
Yeah, all good stuff, but very, very busy. Adrian Morris, Ben's friend from the True North crew, is here as well. Welcome, Adrian.
Thanks for having me, guys. Happy to be here.
Yeah, I'm excited to get into it today. As always, lots of news to talk about this week. We'll go through some news, and then we'll get into Bitcoin Treasury company stuff in the second half of the show. Thank you to Mara for securing the Bitcoin network and supporting this show. We appreciate you very much. Also, thank you to Swan Private. John is a managing director, and Swan Private does its best to help you on your Bitcoin journey, to be a guide, your Bitcoin person. You can talk to, text, ask questions, and they'll take care of everything you need with concierge service and all of the financial services that we offer. You can check it out at swan.com/private. All right, guys, let's dive into it. Let's get into price first, price action. This video is titled that the Bitcoin bull market is on pause, but is reloading. Here we are at almost 110K, getting close. What is our all-time high now? We know we broke the 111.
I think it's 112 even.
112. Yeah. So
on Bitcoin Pizza Day, right? May 22nd.
That's right. We punched up above that all-time high. We're looking to get there again soon. Lots of macro setup here. The environment's getting very interesting. We got a lot to talk about on that front. Deficits, the debt, the big beautiful bill, jobs reports. I'll start out with this M2 chart, which we show, like every other week on the show. I think it's one of the few, correlations, macro metric correlations that actually make sense. If the liquidity is out there, then it's going to flow into different assets, and Bitcoin will benefit from that. So we see this correlation. The trend, of course, is sort of general. I'm not a trader. I tell people that trading's tough, right? 99% of people will get wrecked in the long term. So I wouldn't trade this chart, but I think it's a good sort of indication over a long period of time that we might be seeing something happening on the Bitcoin price. And we've seen a massive spike, guys, in global liquidity over the past few months, really. And Bitcoin price may be ready to follow through there if we can see, have other macro, metrics and conditions that are favorable here. So do you guys think this M2 metric is applicable to the Bitcoin price? Do you watch it at all? I'll start with Ben.
Yeah, it's not something that I track day to day, but you look at that pretty strong correlation, and you can't help but assume that there's definitely a connection there. And anytime money is entering the environment, it's going to start flowing around, and you used to always see it land in the equities market. And that's why when you strip out all of the M2 monetary supply from like the performance of the S&P 500, your real yield drops down to like sub 4. So it's always going to move into the assets. That just seems to be where this settles. And now with all the attention that Bitcoin's getting, with it coming through the corporate treasuries, with it coming from individuals, I think it's a reasonable conclusion that if you see that monetary supply and that liquidity spike, that some of that's going to rotate out of that system, and it's going to go into what the world's starting to learn is that decoupled monetary system, right? If you truly do want to be decentralized and opt out of all the games that are getting played with your finances, when that money becomes available to you, you stick it somewhere safe.
Yeah, I would agree. I think that, so M2 is something that I've watched, but it's not something I actively watch, if that makes sense. It's definitely one of those data points that I think is very, very interesting. And as Ben said, there's a strong correlation in terms of where you can expect the money to go in the coming months. I also think that's what's very telling is that gold was moving for months beforehand. And then we're now seeing global liquidity kicking into higher gear. And we should expect, in theory, if things track the way they usually do track, that Bitcoin is going to start moving here pretty soon, because we have the gold move, we have the increase in liquidity, and now we have this kind of range that we've been bound to with Bitcoin now for, I think, over 50 days or 55 days, whatever it is, being over 100K, which by itself is wild, and people should really take a moment and enjoy that. But I do think M2 does portend a move in Bitcoin that's coming. The catch with it is, as you mentioned, is that you can't trade that.
Yeah.
You're looking at a general trend, right? So the best thing, as we Bitcoiners always say, is have some, hold, get more if you can, and just
Yeah.
enjoy the move when it happens. Don't try to get too cute with it because you'll end up missing the move.
Yep. Absolutely.
Agreed. Yeah, I thought you summarized it well, Brady. Over the short term, that's not a chart that anybody should be trading off of. I was just looking at the Bitcoin chart. I even forgot how many days ago it was now that the price dipped down to, for not even a whole day, it dipped below 100K because we still closed the day above 100K. That was on June 22nd. And, I don't think looking at the M2 versus Bitcoin chart would have told you Bitcoin might dip below 100K for a day. You can put a trade on here. It's not like that type of signal. But I do think over the long term, this is going to be a trend that generally holds true. It is a directionally true relationship.
One thing I found funny was there was somebody out there, and I can't remember what the account was. I wish I could, but what they're actually tracking is the building pace of super yachts. And that's the metric that they're using for when the markets start to get frothy and there's a lot of money sloshing around, is when these new builds in the super yacht market start popping up. So I thought that was a pretty interesting way to look at it. When you start seeing all those ultra luxury goods starting to get money spent on them, that might be when that money supply is getting a little thick out there.
I like that indicator. It reminds me of the Pizza Hut indicator for the Pentagon, right?
Yeah.
So the Pizza Huts around Arlington and the Pentagon get busy in the evenings. Something's going on. That one makes me laugh. All right, let's take a look at Ray Dalio here. He's talking about the deficit and the debt. It's been part of the conversation around the big beautiful bill, which is going to, if it passes, and the latest update is that the chairman of the House has gotten the votes together that he needs, and it should come to a vote maybe even today. And it's going to spend a whole lot of money over the short term and the long term. So we've got a bunch of tax cuts coming right away in 2025. And then we've got some benefit cuts happening after the midterm elections, which makes sense, right? You don't want to do a bunch of benefit cuts before an election. So that was interesting. We'll see what happens there. Here's Dalio talking about him and interview, or basically having discussions with people on the Hill, legislators.
I was recently down in Washington, D.C., meeting with senior people on both sides, the Republican side and the Democratic side, about the budget deficit. And virtually everybody agrees that you have to get the budget deficit down to 3% of GDP. And then I say, why can't we you make a pledge that you will get it down to 3%? And they explain the absolutist policies that must exist. And those are that you must make statements like, I will absolutely pledge not to raise your taxes, or I will absolutely pledge not to reduce your benefits. So that's the equivalent of saying, I will absolutely pledge not to change the trajectory we're on in order to have a better set of circumstances than the likely financial crash that we're going to have. So they all agree about the consequences of this debt problem, and they all agree that they cannot speak up because their constituents would throw them out of office, and their political parties will exert enough pressure on them that it is impossible to make those compromising statements and actions that bring together the revenue and the expenses to produce a good budget.
So we've seen quite a few prominent, especially businessmen, Elon Musk also comes to mind, that have not grasped this idea that nothing stops this train. And here we are seeing Ray Dalio perhaps on the verge of realizing that this is the case. And then where do you go next in terms of how to address the situation? What does it mean? Where is the dollar going? And we've all thought about this stuff for a long time as Bitcoiners, but we're a small group. And there's a lot of influential people who just haven't thought this all through yet, including Ray Dalio, which is interesting because he, is been known and made a name for himself for kind of seeing trends out ahead of time, and he doesn't seem to be seeing this one, guys.
No, he doesn't yet. And we got to give Lynn a lot of credit, because I think that meme that she's got floating around out there might become one of the most widely used memes here over the next couple of years, particularly as the spending continues to get more out of control. I mean, when you're running a fiscal deficit that's in the $2 trillion range, and you think, if you took the approach that Elon was taking, and that's a guy who's got, money's not the incentive for him right now, right? He's already one of the wealthiest people in the world. And he's out there looking for ways to cut, and he hit all these roadblocks, got stiff-armed as they started getting traction, got pushed out effectively, and now they just shut down that Department of Government Efficiency. If you can't go in and put the lid on the government spending, nothing does stop this train. And you started hearing it coming from Trump directly as well, saying that this big, beautiful bill, yes, it's going to increase the deficit. There's going to be more spending that comes net out of this bill, but he said, we're going to get it back in growth. And you have to continue to ask the question, where exactly is that growth going to come from that's going to offset this amount of spending? And I think that that's a problem that we have that we're not getting out of anytime soon, which is why when you look at the need to stimulate the economy, this is something I watch all the time now, because as soon as you make that shift in your mind where you understand that we're a consumption-based, we're a consumer-based economy, we need people spending. That's how you fuel that growth. You have to have your citizens spending, your companies spending. In order to incentivize them to do that, they have to know with certainty that the money they're holding is worth less if they keep it for longer. So you have to spend it today if you want to get the value out of it, because they're telling you that in a year or 2 years or 5 years or 10 years, you're going to have significantly less purchasing power out of that same dollar. And when that's the message that's getting circulated around, and people start to realize, one, just how quickly that value can erode from underneath them, you do get back into that consumer mindset. It wasn't really until you had an asset like Bitcoin. You had gold for a long time that people went to, and that was their savings they put away and didn't think about. Now that's shifting to Bitcoin, right? It's the more digitally native way to do this, and the better way to do this, quite frankly. And people are starting to really grasp that if you just take these politicians at face value, and you take the fact that everything they're doing is geared towards spurring economic growth and making sure that they prop up, the strongest economy in the world and keep it growing and expanding, you quickly figure out that you need to opt out of that problem for your own personal finances. You have to get out of that system because you have no control over how they're doing it. Yes, everybody gets a vote, and we should be voting in politicians that are going to be responsible and try to do the right things. But you have personal responsibility over the well-being for your own family and your own situation. And I think that's where Bitcoin's becoming front and center, because it really wasn't until COVID that I think people started even paying attention to this. You always heard about it, you would hear about inflation, but it didn't get highlighted quite like it did during COVID. And now that it's been highlighted during COVID, all of these new moves that they make, all these new bills that come out, people are dissecting them, and they're looking for that long-term impact. And they're trying to assess, when does this reach escape velocity? When can't we fix this problem or put a cap on this? And I think a lot of people are getting the sense now, myself included, that we're getting really close. I mean, we're flirting with the runaway train here, and you're hoping these people make the right decisions and they start to see this problem and they start to address it. But I'm not sure that help is coming. And because of that, I take the steps to protect myself, right? I start storing my value from all of my time and energy. I move that into Bitcoin. I opt out of that system because that's not where I want to sit. And I don't want to watch this erode through something I don't have control over.
Yeah, and in addition to everything Ben that just said, it's not just that they need to do something, it's that they may not be able to. And the reason why I say that is, once one side actually can take a step towards fixing the problem, the other side is incentivized to undermine it, because they don't want to be seen as the ones that are not taking action, right? So we have partisanship now that's gotten to such a point where everything becomes talking points, everything becomes toxic, and actual helpful discourse gets undone by political rhetoric and by the broader political discourse. So we have a situation where we have a deficit that's spiraling. We have the debt that's spiraling. We have inflation that's eventually going to run away from us. The meme of nothing stops this train is becoming more and more prevalent as time goes on. So in reality, you do have to opt out of the system. You don't really have a choice in the matter. And that's through Bitcoin, that can be through gold, what have you, but you have to do something that's going to allow you to preserve your wealth, your time, and your capital in a way that prevents you from getting sucked into the system and just get stuck on that consumption model. Because there's only so many flat screen TVs we can buy. There's only so many iPhones we can buy. There's only so many cars we can buy. At some point, you're going to reach saturation where the market quite literally doesn't have the capital to keep the consumption model going the way it's been going. So you're stuck on one side, you're stuck on the other, and the only path is through. And I think Bitcoin is that path through. And perhaps some of these, Bitcoin treasury companies can be an auxiliary path through as well. But it really is getting to the point where something has to give, or there just needs to be a test to the middle that this 2% mark that we talk about is not sustainable. We need to have a new normal, for lack of a better term. We have to accept the fact that prices are going to inflate, and then everything kind of resets. But then it starts all over again from that new reset point. Once we accept that new reality, things are just going to start ticking along again the way they always have. So there really is no real way to fix this, to stop this train without significant upheaval. But we can't do it because our entire system, just as Ben said, is based on consumption. So if you can't stop the consumption, you can't stop the train. And that's just the way it is.
Well, now throw in the wild card of AI, and AI
Yeah.
being a
And
deflationary
robotics.
technology. And so now you're
Yeah.
combating the need for inflation to keep the economy growing and expanding versus the deflationary pressures that are coming from AI and now are arriving at a rapid pace.
Yeah.
Right? Deflation's almost as damaging as inflation is, particularly to an economy. I mean, that would spiral the economy down if people all of a sudden realized that they shouldn't be spending because that money is going to be worth more in a year. Right. That's a whole different rewiring for the consumer mindset that I don't think they're prepared to deal with. So they've got some powerful forces that they're fighting now. The way that they used to manage all this is quickly becoming obsolete. And they're going to have to figure out, how do you balance all these different pressures coming? And, this is one of those thread the needle situations, but this is all going to be done by a razor's edge margin.
So I'll just add a couple things to this. Firstly, I think it's kind of interesting that as I see the news that hits throughout the week, I almost feel like there's three categories that we could put things in. It's either nothing stops this train, Bitcoin adoption to various channels and degrees, or thirdly, just like general macro and economic stuff. Like, what's the Fed thinking, employment situation, blah, blah, blah. We're kind of talking about the nothing stops this train category right now. We don't really want this to turn into a political discussion, but I'll just offer two things that I think were interesting this week. Could you guys, your discussion just made me think of this. The first one, Adrian, in particular, what you said about even if one side attempts to do something or even pay lip service to doing it, a lot of times the other side will say, make them look bad for that. So there is an AOC tweet this week that says, JD Vance was the deciding vote to cut Medicaid across the country, an absolute and utter betrayal of working families. Like I said, I'm not looking to get into politics here, so we'll just keep it surface level. But what would be needed to stop the train is some significant entitlement spending cuts. You just look at the pie chart of what the government spends money on. The biggest slices of the pie chart is Social Security, Medicare, Medicaid, interest on the debt, and the military. So you would have to cut Social Security, Medicare, Medicaid if you're going to have a real chance at balancing the budget. But to Adrian's point, and to just read AOC's tweet, if you go to do that, you're going to get called an absolute and utter betrayal of working families. That's not really a winning political message for your political opponents to be saying and for the media to be saying. Now let's take a quote from the other side of the political aisle. Trump had a tweet, or maybe it wasn't a tweet, it got reposted to Twitter, but he said, for all you cost-cutting Republicans, of which I am one, remember, you still have to get reelected. Don't go too crazy. We will make it all up 10 times with growth more than ever before. This goes to what Ben was saying. They're not really talking about balancing the budget, whether it's Trump, whether it's Bessent, whoever, they're talking about growing out of the problem, which basically just means we hope that nominal GDP will grow faster than the debt grows. The debt is still going to grow. They're just hoping on a relative basis that nominal GDP grows faster. And Trump is hitting on the point of it's not a winning message to go for austerity. It's just not, just objectively speaking. So just those are just some more thoughts on the nothing stops this train side of things. Obviously, Dalio was making the same point. So yeah, that's what I got for you.
Well, so the thing with that is that's very, very telling, and there's a lot of things that you just touched on. To stop the train, I don't even know if you can stop it. To slow it down, you have to cut Medicare, Medicaid, Social Security. You have to cut military spending. You have to raise taxes as well. That's something that you're going to have to do that no one wants to touch on as well. All of those are radioactive. Those are third rails politically, right? So you're always going to have either constituents fighting you. You're going to have the political base of whatever party you're in fighting you with regards to whatever you're trying to do. And then you have the reality of the fact that it still needs to be done. So you have these politicians on both sides kind of talking around the issue, like you just kind of highlighted, but nothing's getting done. And growing out of it, sure, that can work mathematically and economically, but it's a perpetual problem. You have to keep doing it. That's like saying I have $30,000 of credit card debt, and my only way of paying it off is getting a better job. As you get a better job, your standard of living increases, and you take on more debt. That's what happens to people at the micro level, let alone at the macro level with the largest economy in the world. So we really need to pull several levers. We are probably going to have to cut spending. We're probably going to have to raise taxes. We're probably going to have to be more austere. And not to sound like a toxic Bitcoiner, but there is something that can be done at a national level by adopting a Bitcoin standard, and perhaps bolstering our economy with something else besides spending and printing and spending and printing. So this is definitely something that's going to be a very, very difficult transition period for the country. And then if you throw in what Ben talked about with AI and robotics, in my consulting job day to day, I am seeing companies that are growing, that are getting more contracts, that are getting more business, and they're reducing headcount. But they're doing it very, very slowly. You're seeing one job here, you're seeing one job there, and it's a slow creep down. But if this trend continues, in 18 months, you have headcount that went from 1,000 to 950. Then another 18 months, you can have 950 that goes to 900. It's going to be a slow creep down while the trend of AI and robotics is going up, while we have all of these other factors kind of playing into the situation. There's no way you could talk around it. Something has to be done. It's just that no political party, I think, has the stomach for it, because if they take it on, it's essentially political suicide. Trying to do the right thing, you're going to get killed. So I think we're just at an inflection point right now, and things are probably just going to keep continuing the way they've been going, really.
Yeah, and I think with all those jobs being lost, I think people are looking for like the broad mass layoffs is what they're looking for, but that's not really how it happens. When I was in consulting, we used to call it managed attrition, which is effectively just not replacing the job somebody leaves. And that's how that would start to happen. So, I do agree. I think you're going to see that slowly over time. I don't think it's going to be an all at once impact, but I think you're going to see roles not being replaced. You're probably going to see fewer job postings coming into the market.
Yep.
And those are going to be some of the signals. But the other problem you have is, you just laid out everything for how they would get the spending under control. And you're right. The problem is if you're trying to spur the economy and use growth, I mean, you've kind of got 5 levers, right? You're going to have to either do investments in infrastructure. You got to cut taxes, give businesses incentives. You got to do monetary stimulus, which, is kind of what we all watch. We're waiting for QE, regulatory reform, or you're looking at, targeted transfers, which is kind of those social programs that inject capital into the areas where people are most likely to spend. So what you saw during COVID, right? Where they're sending the money directly to people, and they're particularly targeting the groups that are most willing to get out into the economy and start spending. Those two things are very at odds. That's part of the problem, right? If you're trying to maintain growth in the economy while you're also trying to slow down the spending, that's a tightrope to walk. It's a tough one.
I think the bill was just announced as officially passed. So consider the conductor of the train just shoveled some more coal into that fire, and the train is not stopping.
Is Bitcoin 150,000 yet?
It should be. The thing is, the train is like a maglev at this point. We're not on coal. We're running on pure magnetic, frictionless speed, and it's just kind of cooking. And I don't know, man. Something does have to give. But realistically, this can go on for quite some time still. That's what's so scary about it. The debt is what right now, what, 37 trillion, 36 trillion, something
37,
along those
above
lines?
37.
Yeah. So don't be surprised if in 10, 15 years we're still having this conversation. We're talking about the debt's at 50 trillion or the debt's at 60 trillion, and we're having the same conversations and the same kind of rhetoric is taking place. So yeah, is everyone watching? Not financial advice, but just buy Bitcoin. You'll be a lot safer if you did. I think that's pretty much the only kind of off ramp that we have right now.
I think the problem is you hear these numbers, right? Like 37 trillion, and it just sounds so not real. Like it doesn't seem like it could possibly be a real number that people tune out on that and, go, what am I possibly going to do about it? Right.
True.
And that's
Yeah.
part of the problem is, there's not a lot that, the individuals can do, which is why you've got to, what do they always say? You vote with your capital, right? That's how you do it. So a lot of us were voting by taking our capital and bringing it somewhere else.
So Ben, you mentioned deflation and how deflation could wreck an economy. And I certainly understand how that would happen in a fiat regime. Bitcoin, and Jeff Booth writes about this, and I'm sure you've read the book or are familiar with it at least, but Bitcoin being a deflationary money naturally aligns with falling prices. So I assume you were talking about deflation in a fiat regime. Do you think of it differently in a Bitcoin regime?
Well, I don't view Bitcoin as being deflationary. You've got a shrinking new supply coming to the market, but technically the new supply entering the market would be considered inflationary. So it's decreasing in how inflationary it is until it ultimately reaches zero. So I don't necessarily view Bitcoin itself as being a deflationary asset.
I think not in a sense of monetary supply, but maybe in a sense of encouraging prices to fall because the values of Bitcoin is going up. Yeah.
It's a huge problem in the fiat monetary system. There's just no way around that because everybody's been conditioned around all the principles of savings that are tied to an inflationary environment. So as soon as you see that pivot happen, if there was even an inkling that we were going into a true, and I don't think this is coming anytime soon, but you're starting to see pressures that could push it that way. The second that happens, you have to rewire the way everybody thinks about money.
Yeah.
It changes everything that you've been taught, the way that you save for your retirement, the way that you buy things in advance. It just changes the way that consumers behave. And when you do that, you're really putting a massive disruptionary force out there that we're not ready to combat with new policies coming out of the government, coming out of the Fed, coming out of anywhere. So I think it's massively destructive if it actually got to that point.
Yep.
Now we're a long way from that point, and I still think we're a very long way away from, Bitcoin becoming the unit of account out there that we're going to look at goods and services. Although, that timeline, I would imagine, keeps getting pulled forward as you have mismanagement around our current monetary supply and our practices here in the US and in the governments across the world. It's not just the US. This is a global problem. The US just happens to be apparently the best run of all of them. And we're still seeing all of these problems, right? Which is why you have dollarization happening around the world as people have to abandon their own currencies and start using the dollar as the most stable of the currencies, or one of the most stable. There's a few that are more, but when you look at that shift, the faster this train starts moving, the sooner it pulls that reality that we might have to shift to an asset that's decentralized from any of these nations, any of these economies, and have to start repricing the world in it. And I think that repricing probably would start at the commodities level. It'd be repricing of things like oil, where you've got this trade settling amongst nations. They don't have to trust each other anymore. You're not trying to figure out which currency are you going to settle this in, who's going to accept what. So I think that's probably where you start to see the first signs of that happening. And we already saw some signs of that happening, right? BRICS had talked about it before, about whether they could use Bitcoin to trade in commodities amongst themselves. So, there's signs that probably is coming. But I still think it's a little ways off. I don't think we're quite to the runaway train phase, but man, are we close.
I would agree. I do think that if you really think about it, with like what Ben mentioned with BRICS and whatnot, the conversations are happening now. One of the other scenarios I think playing out is that rather than having like a hyper Bitcoinized world, we have a world where Bitcoin is one of the premier commodities in a basket of commodities that the world is operating off of. So I can see a future where you have like gold, you have silver, you have Bitcoin. Maybe even because things get so out of hand, you start to look at more non-traditional commodities like other precious metals, palladium, platinum, all of them acting as a giant basket of currencies that the world kind of operates off of. And you're still going to have fiat currencies, but we may default back to another form of a gold standard, but a gold standard that operates on a basket of currencies, or perhaps even a gold standard that operates on Bitcoin. And other nation states have their own version of that, whether that be through Bitcoin, whether that be through a reworked gold standard, so on and so forth. The fact of the matter is, if your money gets to a point where you're holding it, and the longer you hold it, the less it's worth, which we already are at right now, but it's not, people don't really notice it. People don't notice that they go to the grocery store, steak was, 15 and now it's 15.50, right? It's that slow creep that we were talking about with change.
It is getting faster though, Adrian.
Very much so. Since
My grocery
COVID,
bills were probably $200, $250 a week.
So you got milk and eggs?
7 years ago, and now I spend about $400 a week.
Yeah, no, since COVID, like it was getting bad, but since COVID, things have gone way out of control.
Yeah.
Right. And people are noticing it to the point where you have everyday citizens talking on TikTok about it.
Yeah.
But it's still not to the point of panic. The point of panic is Monday you had $50, Friday you got 35.
Yep.
Like that is the kind of situation we're talking about, and that's the kind of situation we've seen in other nations, whether it be like some African nations, whether it be Venezuela, whether it be whatever historical example we want to use. We've seen this happen, right? And what Ben is alluding to is the train is picking up speed, and there doesn't really seem to be anything getting in its way. Now, if we get to escape velocity, where we have that 50-35 kind of dynamic, the world is going to get shaken pretty quickly, because if the United States economy is facing that reality, how many countries are on a dollar standard by default and are going to experience the ripple effects of that? But it's going to be exacerbated because their economy doesn't have the size or the reach that ours does to kind of absorb some of that shock. So I think a future where Bitcoin, where other commodities are kind of taking some of the stress off the system is very, very likely. But to Ben's point, how long is it going to take to get there? And will it happen with a natural transition? Or is it going to happen through crisis?
Yep.
Where we need an emergency Bretton Woods 2.0 or 2.5 or whatever you want to call it, where something drastic happens and the world we knew on Monday is different than the world we knew on Friday. I hope it's gradual. I hope it's not sudden, because sudden, that means shock, that means upheaval, that means conflicts. We don't really know what can happen in that kind of a scenario. If it's a gradual transition that is done through necessity, I think that's a safer path.
Yeah, Main Street's feeling the pain, right? I mean, that's the reality of everything that's happening here. Is you can see the inflation prints all you want, but when you go into that grocery store, like you said, Brady, for people on Main Street, you're feeling the impacts, and it doesn't feel like a 2 to 3% impact that you're feeling.
Yeah.
Right? Prices are jumping.
Yep.
The other thing you have to look at is just housing, right? The average income should be able to afford the average house in the US. That would seem like how that should work. That is not the case right now. I mean, the price of housing is getting out of control. Part of that is because housing started to be hoarded, right? It was an investment because of the devaluations of the dollar. You always had the appreciation in the real estate, plus you had the cash flows coming out of it. So it became this really desirable investment asset. But even that's starting to get shaken a bit. And a lot of these real estate investors are looking at all this equity that they've built up in their portfolio, and now they're wondering whether they can actually unlock that anymore. So that's becoming a problem. So you may get some correction in the housing market as they try to get out of those investments and move to something else, but you have to ask what. And the same question comes up with Bitcoin. I always hear people asking, well, when will you take profit on Bitcoin? And, my response is always, well, what am I taking profit into? Because if the problem hasn't been solved, there's no gain for me to take there. It's kind of like looking at Venezuela and looking at the Bolivar and saying, if they had moved out of their currency into the US dollar, when was the right time for them to take profits on that trade back to the Bolivar? It wasn't. It was never the right time. Same thing now with Bitcoin in the United States. If I take my US dollars and I exchange them for Bitcoin and I'm holding Bitcoin, unless I think the fundamental problem with the US dollar has been fixed, there's no point in pulling gains back to the US dollar because it's still a broken currency. It's broken money.
Yep.
And that's the mindset shift that people have to think of, because it sounds crazy to them when you're buying Bitcoin. They're like, well, how long are you going to hold it? And you go, well, I think forever, because I don't see another alternative here. This is where I can trust in storing economic energy. And there's no reason for me to bring it back out to US dollars with the exception of to transact on something. That's it. So you save in what you know is strong and what you can rely on. And there's very few things in this world that have those properties. Thank God we found one of them.
Mm-hmm.
Yeah, for me, the notion of selling my Bitcoin, I don't know. That's something that's becoming far less likely, even with regards to what price action we can see in the future. I think borrowing against it is something that I've done pretty extensively, and it's something I'm going to continue doing, because I've just done the math on a few different things. Even with interest that I'm paying on borrowing against my Bitcoin, I'm still well ahead because of the price appreciation of Bitcoin over the last several years, and because of the fact that cost of living is increasing, everyday expenses are increasing, and I'm not borrowing against it to buy a flat screen TV. I'm borrowing against it to either buy more Bitcoin or other equities and assets. So I think that's another shift that's probably going to have to happen in the broader community, in terms of not the broader community, sorry, the broader economy, in terms of the average investor. You're going to have to change what you buy. If you keep following the consumption model, you're always going to be chasing the rabbit. You're never going to get ahead. You've got to get to a point where you start to think of yourself, for lack of a better term, as a business, and you're managing assets. And that's the kind of additional stress it places on the general population. Some will exceed at that, some won't. That's just the nature of the world. But I do think that what we see on X, what we see in terms of social media, there does seem to be a growth in the general population understanding that they need to invest. They need to do something differently in order to get ahead. And I think Bitcoin and its proliferation actually has helped that, because it's been a very, very much grassroots movement, right? This is the one time where retail has front ran the institutions. So that trend, I think, will continue. And I think that, ironically enough, the escape velocity we see in Bitcoin is going to be tied to the fact of the broader economic conditions. And it's going to be not just because of utility, it's going to be because of necessity. And it's going to be because, it's an idea whose time has come. And people need to make that transition. And like, to Ben's point, why am I going to go from Bitcoin to the US dollar, or from Bitcoin to whatever? It doesn't make sense. It makes far more sense to hold the Bitcoin and make that, instead of the house that people would be borrowing against in terms of equity, Bitcoin becomes that for a lot of the population.
Yep. And it brings housing prices down as the monetary premium goes away. We are adding onto our house right now and going through that process. And when I started looking into the numbers, a year ago, when you were thinking about this, I was absolutely shocked how much our house was valued at, to be honest. I was like, oh, we have a lot more equity than I thought. I just hadn't looked at it for years and years. And I was just absolutely shocked at the number. So I guess we'll take advantage of it before it deflates.
Well, President Trump actually just talked about that. I did a post on it. I think it was this past weekend. He said that Bitcoin can take a lot of pressure off the dollar. Mm-hmm. And essentially what he's saying is a lot of the premium that's going into a lot of different equities and assets like houses and whatnot, Bitcoin can take that pressure off and cause a siphoning away of capital into Bitcoin that will bring those prices down. And I think this is something also that Leon Wancombe's talked about as well with his talks about Bitcoin and real estate. The real estate prices, it's because, and you talked about it, Ben talked about it, people have been using real estate as their savings account. And they've been doing this now for about 3-4 decades.
Yep.
There's no reason that houses since COVID should have almost doubled. It just doesn't make any sense unless people were running to something in order to get that ability to save and grow their capital. And the thing about it is that I think corporations have been doing that a lot as well. And you're seeing a lot of cross-collateralization in the sense that corporations are buying houses and they're using the equity, the value from those houses, the collateral from those houses to borrow more, and they're buying more houses. because I see it in Arizona where I live. I'm seeing it in California. There's entire neighborhoods that are bought up, but the houses are empty. And I think that that is a definite sign
Yep.
that everyone sees that the train is not stopping, and they're trying to find a way to if they can't get off the train, to at least secure their seat on the train.
Yep.
And it's just very, very telling. And this is why I think the Bitcoin adoption curve is just going to get more and more violent as years go on.
Yeah. My loan officer, when I was talking to her about what we wanted to do, and I told her I was surprised at the value of the house, and she just looked at me and said, "Well, it was a great investment." And I was like, "Have you ever heard of monetary premium?" I was like, "No, forget it. We're gonna."
Well,
Yeah.
it is a problem that a lot of people face, because they saw their houses, going up in value, and then maybe a year or two they sold them to capitalize on that.
Yeah.
And then the prices did exactly what they didn't think they were going to do, which was kept going up.
Kept going up. Yeah.
And so now you're, stuck on the sidelines, and the economics have shifted largely back towards renting being the better choice for a lot of people. But, if you start seeing those borrowing costs come back down, that's what they need to shake people out of these mortgages. Because right now, with all the uncertainty, everyone who's locked into this super cheap debt in these, 3% mortgages, they're not going anywhere, because they know that, okay, say they take that premium they've got in their house now and they roll it into another one. Well, the problem is the value of that one's inflated too.
Yep.
So you're just rolling inflated money into another inflated asset, except now you're borrowing more against it. And if this reverses on you, you're in a worse spot.
Yep.
So it's a tough situation for people to be in. And it's why you don't see that much supply hitting the market, other than coming out of these investor portfolios now.
Yep.
Where they're starting to look at this, seeing some weakness out there, figuring out that there's less and less buyers, right? You're just trading these houses amongst the investors that are rolling capital from one to another. But when you're actually trying to sell that house to a family, there's not that many of them that can afford them anymore. It's a really tough spot to be in.
Yep. All right. I was thinking we can move on to Bitcoin treasury companies. We've got about 15 minutes left. So I asked Steven about this last week, and there's, debate going on Twitter. I think some of the plebs are calling us stonk coiners. And the idea is, I think that these treasury shares in these companies are basically paper Bitcoin and maybe having an effect on price. They also are saying that, there's perhaps an unethical aspect to this. Maybe it's like NFTs or ICOs, and that there's just sort of this kind of emerging mania, or maybe it will result in a mania at some point, to take advantage of this really, what is fundamentally, I think, a good idea, but is maybe misapplied or applied in unethical ways. So I'd love to hear what you guys think about the ethics of this Bitcoin treasury strategy environment that we're in. You want to kick it off, Ben?
Yeah, for sure. It is kind of interesting how the storylines change all the time, right? I've started to hear that this market's saturated. There's too many of these. But then you go and look at the scale of most of these companies, and it's negligible. With the exception, if you took strategy out of the market that you're tracking, this would still be tiny, right?
Mhm.
Strategy is the only one that's really achieved serious scale here.
Yep.
So, there's a lot of narratives that continue to happen. But, again, I'll say it's kind of the same thing going back to Bitcoin itself versus the US dollar. Unless they fix that problem, there's no reason these companies aren't going to keep popping up. And I think what people look at and still have trouble grasping is the leveraged play.
Mm-hmm.
There's not many people that would argue that a company having a Bitcoin treasury is bad. We just haven't seen that much of that. You started to see Figma came out, and they, kind of had this secret treasury that they're building in the background. They were using some ETFs and things to do it. I would guess that there's a lot more companies out there like that than we know about now that are actually building those treasuries and starting to shift capital out of the US dollar or out of treasuries and moving it over to
I don't think
Bitcoin.
people have much problem with that, Bitcoiners.
No.
But
it's the leveraged play that people are still having a hard time grasping, because, it's that arbitrage. And there's this sentiment that goes around that this can't last.
Yep.
But if you're looking at the way that our money's been managed, that arbitrage isn't going away anytime soon.
Yep.
So it's about figuring out what teams are going to do it responsibly versus which ones are going to go and try to compete too heavily on things like leverage.
Yep.
That's what I always watch for. When you look at a company like Strategy, and luckily Bitcoin rating, the metric, which effectively measures how over collateralized you are on your obligations, I think that's a good metric to get out into the market, because that one gives you a sense for whether these companies are being responsible or whether they're putting themselves in a position where they couldn't withstand a drawdown.
Right.
And that's what investors need to start watching for now, because there's this sentiment out there that volatility is the only thing that these companies need to be chasing. And if volatility is the only thing that you're chasing, the way they're going to try to create that is through excess leverage, right? Maybe instead of what Strategy used to do, going 20 to 30%, they've been well below that for a long time now, but going up to 20 to 30%, you might see companies start establishing themselves with a policy that says we can go up to 60% leverage.
Sure.
And they're going to try to create and manufacture that volatility. That would be a very short-sighted approach to this.
Sure. Yeah.
And I think that's where investors should start getting nervous, is if you start seeing that, and if they're using the wrong types of debt, if they're out getting secured debt from banks or anything that's going to come with covenants and potential liquidations or calls on collateral, whatever it is, that's when you need to start getting worried about it.
Yep.
In terms of just the overall approach of effectively, buy today, pay tomorrow, which is at the most simplistic view what a lot of these companies are doing, right? They're borrowing money, they're putting it in Bitcoin today. They're playing on that CAGR and that growth rate of Bitcoin to be able to pay it back later, after Bitcoin's appreciated in a very serious way. So there's a lot of approaches out there, but every time a new tool comes out, the market has to completely redigest what's going on.
Right.
So they weren't comfortable, but they understood equity issuing through ATMs. They started to understand convertible bonds and who the buyers were and why it was valuable to that group. Now the preferreds have come out, and then you've got things in Japan like moving strike warrants you got to watch. Now you've got bonds coming out that are Bitcoin denominated in Europe. There's a lot of new tools that are entering the market, and that starts getting people questioning, which approach is the right approach for these companies to take.
So Adrian,
there's a huge evolution here that investors are going to need to get smart on in a hurry to separate which ones here are really going to be your value plays for the long term, which ones can sustain this and build value for shareholders over a long period of time, versus which companies might be using this as a marketing push where you're just trying to get interest in the equity.
Yes, I agree with that 100%. Adrian, I think companies that are doing this responsibly are really understand that you've got to target the big institutional money. That's what's driving this, right? Is that you're opening up new kind of on-ramps to capital that is restricted from getting access to a Bitcoin exposure. And that's really the target investor that the companies are looking for. And there's another, I think, set of companies that are or may eventually be more targeting toward like retail engagement and things like that. But really that's the clients that these companies are looking for, right? These big, huge pools of debt capital and such.
Yeah, I would agree. So, and this may upset people watching this, but as it stands right now, it's not retail that's been moving these trades. It is institutional investors. If you take a look at what Strategy has done in terms of the convertible bonds and in terms of the initial capital raises that they did, and now they have all these different levers that they have strike, they have stride. All of those offerings are not necessarily purely catered to the retail market. They're catered to a broad market. So one of the things I've been talking about is that Strategy is building on an economy, right? So they have a common stock, and then they have the three offerings that they have on top of it, and they're going to be, they're probably going to find other offerings to bring to the market. Then there's the options market. All of those different levers, those are very attractive to institutional players, and that's how Strategy has been able to scale this. From a purely dollar for dollar standpoint, if people really understood the market, they would see that the amount of retail capital coming in is dwarfed by the amount of institutional capital coming in.
Yeah.
It's institutions that are pushing this. So I bring that up to say the concerns about mania and us being overheated with regards to all these different treasury companies, I think for the moment is overdone, just because we have something like 50,000 companies globally that are traded, and we have just over 100 that are adopting this Bitcoin treasury. I don't think we're in a mania phase just yet. I think what we are seeing is a early little twist of the S curve in terms of corporate adoption. Now, that said, for people that think that this is, perhaps bad for Bitcoin or whatnot, a point I'd like to bring up is that if Bitcoin is a peer-to-peer network, peers can be of different size and scale. These corporations are just different peers in the network. And in my view, it was an inevitable evolution of what Bitcoin is. You're still maintaining true to what Bitcoin is, but you're evolving the profile of the players in the market. And if they're not a custodian, they are a peer. So strategies appear, semblers appear, metaplanets appear. The list goes on and on and on. And because they are peers, that's how you're seeing different execution models for all of these different plans. You have the strategy model that's very, very focused on different ATM equity offerings and converts. You have Metaplanet that's doing the moving strike warrants. You have blockchain group that's doing the Bitcoin denominated bonds, and you're going to see different models that are playing out. And to Ben's point, you're really going to have to figure out which one of those is right. The controversial point I'll bring is this: all of them could be right if managed appropriately, considering that Bitcoin is a common denominator of all of them. I think that, and maybe this is me being a toxic Bitcoiner, but I think that these companies are almost guaranteed success long term, as long as they don't do what Ben mentioned, get over leveraged. That is the model that I think is going to be the wrong model. You don't want to start dialing up to 40, 50, 60%, because if the second we get a strong drawdown, you're in the crosshairs of all kinds of trouble, and you're going to get blown up. But law of averages says that one of these, two of these, three of these companies are probably going to get blown up or acquired or be forced to pivot. It's just the nature of business. But that doesn't necessarily mean that they are flooding the market with paper Bitcoin, which doesn't really make sense if you think about how equities operate. They're not flooding the market with Bitcoin. They're flooding the market with shares that are then being used to buy Bitcoin. But I think all of these different distinctions are what the market is trying to figure out. And the initial pushback we're seeing right now is the same thing that happened with strategy. People were calling it a Ponzi for the better part of 3 years.
Yep.
And then they moved on to, are they going to get margin called? And they moved on to another narrative and another narrative. And we're seeing something similar now. As things stabilize, as they equalize, I think we'll see what's what. And then we'll move into the second phase of adoption with larger corporates and more corporates coming into the mix.
I will say what I think a lot of people are calling mania, right? Is I think they're looking at these new micro caps that enter this market. And what you're really seeing is retail capital rotation between these companies. So, one of the phenomenons that happened recently was people started looking at different metrics, like, days to cover MNAV, right? Basically, how long would it take a company to earn the premium that they're being awarded at the current day? And investors started to really value the front end of that growth curve. So what they started doing was rotating capital amongst these companies into the one that has that lowest day to earn its premium. The only problem with that is what was happening is a lot of this capital is rotating further and further out the risk curve and deeper into the OTC markets. So you're putting more capital into less liquid equities, which drives those prices up really quick. The other side of that is when you try to get out of that trade, you can get people stepping on each other because liquidity can be really thin. There's not enough trading happening for the amount of capital that rotated in. You can find people willing to sell it to you at really high prices. It's tougher to find the people to buy it. So when you get a lot of big investors trying to get out, you see these collapses in those equities and people are kind of pinned for a while. They can't get out while, on paper, they're worth a lot of money. So I think what they're calling mania is that capital rotation, largely in the retail community, chasing that early part of the trend and trying to capitalize on that run up that comes when you see aggressive companies acquiring Bitcoin quickly, which in the metrics translates to they can cover the premium really fast. Therefore, it's a good value today. Right. So as the thinking evolves in the market, you start to see the capital from the trading group, right? The more speculative group chasing around these companies based on what that new narrative is. So I think you saw a lot of that and people interpreted that as a mania, but they're not realizing it's happening in these really low market cap stocks. So it doesn't take a lot of capital to make those moves. In my opinion, that's not what constitutes a mania.
Right. Yeah. It's the institutional money that's coming in that's moving the market. And those are professionals who are evaluating whether or not companies are operating responsibly. So if you're going to have to be beholden to those clients and not retail as you develop your business, which encourages responsible execution. John.
Just a couple of thoughts from me here. So I think the Bitcoin treasury company trend is like the ultimate don't hate the player, hate the game type thing. The reason this exists is because of the existing system and what Bitcoin is in relation to that existing system. So these are my big three things that allow Bitcoin treasury companies to exist. If Bitcoin rises against the dollar, if corporations can borrow and issue dollars at a speed and a magnitude and on terms that individuals cannot. And then number three, if investors, because just because a corporation can issue some security doesn't mean that an investor wants it, right? But on the investing side, if the investors want or need, if they're literally forced regulatory wise to get this, I'll call it adjusted or securitized Bitcoin exposure, then Bitcoin treasuries are a thing, whether we like it or not. Funny Stefan Livera tweet, I think it was just this week, there is a fiat regulatory arbitrage that exists from now until hyper Bitcoinization. This is going to be a thing for quite a while. It does not mean that all the companies will be successful. It doesn't mean they're all going to take on prudent leverage. They're not going to execute. They're going to have their own management teams. They're going to have their own legacy businesses, et cetera, et cetera. You can't just throw a dart at a wall and say, buy this Bitcoin equity company in my portfolio and I'm going to make money. It's not that simple. But this is a thing based on how the current system works. And then just one final thought that I wanted to throw out, because this just came to me now as you guys were talking, to the people who don't like this trend. Actually, firstly, there was a great tweet from the Jesse MK on Twitter who pointed out that the people who don't like this, they might not like the whole idea of a corporation. And again, this is don't hate the player, hate the game. The number two in my list of three things, the fact that corporations can get financing better than individuals, that's a function of the existing system. If you don't like that, you might dislike the fact that corporations can even exist in the system. I'm not even going to get into whether or not they should or they shouldn't, but you're just not liking the existing system. And then lastly, to the people who don't like this trend at all, this is the part that I think just came to me. So maybe I'm talking crazy here, but you guys let me know. If you don't like this trend, wouldn't you prefer, if the trend is going to exist, wouldn't you prefer that hundreds of companies, individual legal entities pull it off? What if it was only MicroStrategy and they're the only one every Monday saying, hey, we bought all this Bitcoin. And then a few years down the road, MicroStrategy owns 2 million Bitcoin, whatever, pick your high number. Would you rather that just as an A/B test, or there's hundreds of companies that own Bitcoin and they've been pulling it off alongside MicroStrategy? If the trend is going to exist, wouldn't you prefer option B, where there's hundreds of more decentralized entities that control Bitcoin and it's not a monolith?
Well, I think that for the people that don't like it, they may also not like strategy as well, and they would prefer that none of it existed. But with the A/B test, I think you're right. I think it's far more beneficial to Bitcoin and to the world overall if we have several corporations that are doing this, because that means the trend is going to continue. And Bitcoin, whether people like it or not, and this is just my opinion, the way for Bitcoin to get truly entrenched in the world and the way for us to truly accelerate hyper Bitcoinization, if it's even possible, is through corporate adoption. Nation states, I think, are going to be last to the table. I think we're going from a very, very bottom up approach. We've gone from the individual to the corporation, and then we're going from the corporation to the nation state. I think that is a progression, just because of the nature of Bitcoin's movement. If corporations thought as we thought, if nation states thought as we thought and knew what we knew about Bitcoin and had the ability to think about it, they would all be buying it in mass already, right? So they are clearly going to be the last at the table. And I think that corporate adoption, whether more, I don't want to use the term dogmatic, but whether more hardcore Bitcoiners think that a hyper Bitcoinized world is possible, that was not going to be possible without corporate adoption. It just wasn't. So, that's just kind of the nature of the beast. And I really think that this is actually good for Bitcoin. It's good for adoption. It's good for the narrative. It's good when you have corporations saying this is not a Ponzi, this is something revolutionary. And you're going to have ones that get burned, but we're fine with that. If you can't execute the strategy properly, you shouldn't be doing it in the first place. And I think that the market will kind of rectify that for us. But this is all good. I'm very, very encouraged by what I see with this general trend right now.
Yeah, I think there's one thing we always have to drive home, which is Bitcoin treasury companies are not a replacement for Bitcoin itself in your portfolio. I always say it. Most of the people that are investing in these, they tend to say it. Bitcoin's the foundational component of the portfolio. If you want to take a piece and try to outperform, that's what these Bitcoin treasury companies are for. But one of the powerful things that they are doing, and yes, it targets the institutions, but it also applies to retail, particularly in retirement accounts, because you have people structuring portfolios around 60-40, is you've shifted that, bond or fixed income component of the portfolio, that 40%. And where you used to be buying assets that were betting on the future value of cash flows of another company, right? If you're buying corporate bonds, you're now buying fixed income on an asset that the company already owns. It already has the collateral coverage. It already has the value there backing that product. So it is a shift. And what's beautiful about it is these preferreds in particular, it's kind of unheard of to have 10%, 6 to 7 times over collateralized products out there in the market. With these products, because they're liquid and you can watch the collateral position of these at any time, it gives you the ultimate flexibility to be able to rebalance in the event you got nervous. If that collateral ratio got down to 2-to-1 coverage and that made you uncomfortable, you're going to see that in real time. Your bond portfolio, I would dare to bet that nobody has any clue what's backing those bonds that they're holding. Zero.
Not a chance.
But with these treasury companies, it's made this massive shift in the market towards radical transparency for corporations. And I think that outcome of this is going to have repercussions for normal corporations as well. I think you're going to have to start being more transparent in the way your company operates. I think investors are going to demand it because then you can understand. They don't want to rely on an SEC filing that comes out once a quarter or the annual report that comes out once a year to get updated on information. They're wanting real-time access to information. So for these treasury companies, they're the first ones pioneering real-time data, showing exactly what they're holding, showing every step of execution along the way, putting their executives out there to face the investors, to explain what they're doing, why they're doing it. It's a huge corporate transformation. And if that was one of the only things that came out of this entire push, I would say that alone is worth it, that it's pushing that.
Yeah, I would agree. So one of the things I've talked about is that people perhaps expect instead of respecting the fact that these are the securitization of Bitcoin, they're really trying to expect the Bitcoinization of a security. And I don't think that's possible. But what I do think is possible, to Ben's point, is that because of the nature of Bitcoin and because of the broad social network that exists in tandem with the computer network and the network that is Bitcoin, it forces corporations to have to be transparent. Strategy has been very, very forward-facing in that, and they've been pioneers. And if you've noticed, any other company that's come out, they've really been following that model. So I do think that there is validity in the sense that Bitcoin is forcing a transformation of finance through adoption. It won't be a full transformation. They're not going to start doing everything away that the Bitcoiners, quote unquote, love. But this level of transparency, Strategy's website showing every nook and cranny of what they're doing is unheard of. No companies, except for ones in this space, like Metaplanet, Semler, the list goes on, are doing that. None. And it may ironically force companies outside of the space to adopt it as well. And it may force a shift in terms of transparency. And that's why I also think there's so much political pressure against Bitcoin still, even though we have a president that's saying all the right things. Just think about it, for a nation state to adopt Bitcoin, they can't do it cloak and dagger. They have to be very transparent. The public is going to want to know what they're doing with the Bitcoin, where they're sending it, how they're going to use it, so on and so forth. So that's why another reason why I say nation states are going to be the last of the table, because they're going to have to adopt that model. They can't do slush funds with Bitcoin because the entire nation is going to be watching the chain to see what you're doing. And it's just going to create a fundamental shift in how things are done. So all of this is good in my view. That's why I'm so bullish on the concept of corporate adoption, not necessarily specifically on any one corporation per se, but I think the trend is very, very good. And I think the trend is going to serve Bitcoin well in the future.
Some companies might not be ready for real-time feedback from investors, though. We can
not
tell
at
you
all.
firsthand, it comes fast. When they're unhappy with what you're doing, you hear about it right away. So some companies might not be looking for that if you're not doing things.
They're not
the right way.
ready to have a 2-hour earnings call with hundreds of thousands or whatever it was people on it either.
Right.
Well, these things are inevitable. I wrote a comment in the YouTube chat here, but and Rob brought up a comment here where he said that this is, this is not corporate adoption. The Bitcoin treasury companies aren't corporate adoption. It's games playing, and corporate adoption looks more like a company like Steak and Shake or Figma building a simple Bitcoin treasury strategy and not adopting the kind of leveraged Bitcoin, securitized Bitcoin strategy that we've been talking about here. But I wrote that I think when done responsibly, like, first of all, these are inevitable. They're going to happen. They're going to be around. It's an arbitrage that exists. It's going to be exploited, and it should be, because we're bringing in, eventually trillions of dollars of capital into Bitcoin that couldn't otherwise get exposure to that price. And since they are inevitable, I think it's important that people who are professional and responsible are executing these strategies, preferably Bitcoiners, responsible Bitcoiners who are executing these strategies, and companies that are attempting to, sway retail investors to buy their stock so that they can pump their treasury practice. It's not really going to happen, as we discussed here. The retail investors aren't moving the market compared to the huge amounts of capital that are coming in from institutions. They're really moving the market. So these companies need to focus on the institutions as clients. The institutions are looking for responsible behavior and execution. And so the companies will do that. Companies who don't will go by the wayside. That's really the crux of it, in my opinion. People aren't going to be able to stop it. And so we might as well have some Bitcoiners who know what they're doing and can be responsible, take control of some of these companies and shepherd the strategy in the correct way, the responsible way. Gentlemen, thank you so much for joining. I have really much enjoyed the conversation. Any last words from you guys?
What do we call this one, guys? Swan Signal North. It's True Swan Signal. True Swan, something like that. I don't know what the right one is there.
We'll have to work on the branding for this one. We didn't bring our.
We'll have to wear the noodle on that a little bit.
Yeah. Well, we're gonna do more work together, guys, over the coming months and hopefully years. So hopefully, I know we'll have you back on, Adrian, if you're willing to do so. Absolutely. It's been awesome to talk with you. Yeah.
I would be happy to.
All right, guys. Thanks so much. I'll just close this out here and you guys can hop if you'd like. Thank you so much for joining us again. I said Friday at the top of the show. That was force of habit. It's actually Thursday. Tomorrow is a public holiday, and I'll be at a barbecue with my family, setting off fireworks like any true-blooded American should be doing tomorrow. Of course, I will actually trying not to be talking about Bitcoin tomorrow. I've given up on trying to convince all my family, outwardly or like in an offensive way, trying to bring it up. You guys might have been the same. I've been doing this for years. I just wait until they come to me at this point. No Bitcoin conversation tomorrow. I got it out of my system today. Thank you to Mara for supporting the show. They are the largest public Bitcoin miner in the world. Thank you for securing the Bitcoin network. We appreciate all the miners out there. Swan Private. Check it out at swan.com/private. John Haar is a managing director. We've got over 20,000 clients. We've bought over $4.5 billion of Bitcoin on behalf of our clients. We provide concierge services. You can get a hold of your dedicated rep anytime you want. Even in the middle of the night. I've heard it's happened, but please, I encourage you not to do that. But that's the kind of dedication these guys have for serving their clients. Often develop good close friendships, and it becomes something beyond just a business connection. So check out Swan Private at swan.com/private. We would love to have you join the Swan family. So we'll see you next Friday at the same time, 2 p.m. Eastern, 11 a.m. Pacific, here on the YouTube channel and on @Swan on the Twitter network. I still call it Twitter. I don't know. Do you guys still call it Twitter? I'm still on Team Twitter. I don't know how long that's going to be. All right, guys. Take